Building trust at Wells Fargo, Friday marked 1 year since the company's phony account scandal first broke. Just last month, it was revealed that the total number of unauthorized accounts opened could be as high as 3.5 million, nearly 1.5 million more than initially thought. Joining me right now in a Fox Business Network exclusive is Wells Fargo CEO and President Tim Sloan. And Tim, it is good to have you on the program this morning. Thanks so much for joining us.
Oh, Maria, it's terrific to be here. It's good to see you.
You have a whole list. I have a progress report in front of me, which are some of the most important completed actions to date in terms of leadership and customers to get this behind you. What are the next steps in terms of rebuilding trust?
Well, Maria, I think the next steps are to continue on the plan that we set about a year ago, very focused on fixing anything that was broken, inviting third parties from the outside to help us look at the company very critically, continuing to remediate our customers. You mentioned the results of our review of additional accounts last week, so we're very focused on that. And then building a better Wells Fargo and rolling out new innovations like Control Tower and a new digital mortgage application. So there's a lot of exciting things that are happening at the company.
I want to ask you more about the digital end of things because we're hearing that a lot from all the banks.
Yeah.
But first, in terms of this account scandal, why did we learn that they were 3.5 million? I mean, initially we thought there were 2 million. Then there were these sort of fees and undisclosed things that were coming out, sort of more indications that this could be even worse than people thought. An audit that found the number of sham accounts may total 3.5 million. How do we know that it's actually over now in terms of, do you know that if there are more than 3.5 million accounts?
Well, first and foremost, we agreed last fall to expand the number of accounts that we looked at as part of the consent orders with our regulators. Beyond that, we said that we would look at 2009 and 10. So what we did, Maria, is we expanded the review to nearly 8 years. We looked at 165 million accounts. What we found was that there were potentially 3.5 million that were unauthorized. Frequently what happens is an authorized account and a potentially unauthorized account look very similar. We found 190,000 accounts that we needed to remediate. We're in the process of doing that right now. Our review of retail checking accounts is finished, and now we're focused on remediation. So that's done.
So, Tim, you know, anyone who knows you feels that you have the highest integrity, and you've shown great leadership in this scandal. But tell us from your standpoint, how did this happen?
Well, it happened because we had an incentive plan in our retail banking group that drove inappropriate behavior. When issues began to occur within our retail banking business, we didn't move as quickly as we should. When they got escalated to the senior management team, again, we didn't move as quickly as we should. We've fundamentally changed the company in terms of how we're organized. We've centralized corporate enterprise risk functions. We ended that incentive plan. We changed management. So we've made many comprehensive moves to deal with that. But clearly, we made a mistake. We had to take responsibility, and we're now fixing anything that was broken.
Look, during the financial crisis, obviously, you acquired Wachovia. What can you tell us in terms of the legacy of Wachovia? Did it go on there as well, or did it originate somewhere else?
Well, I think the account review that we did went back through 2009 at the point when we brought Wells Fargo and Wachovia together. The time before 2009 was really dealt with by the class action settlement that we agreed to. I think that again, the fundamental issues occurred at Wells Fargo. We own those. We've taken responsibility, and now it's we're really focused on moving forward.
How do you move forward in terms of shareholders? I mean, you've got to identify the growth, tell us, and make sure the constituents know where growth comes from. But then there are also deliverables like dividend payouts, like buying back, like acquisitions. Is all of that on hold?
No, not at all. In fact, we increased our dividend to 39 cents a share in the third quarter as part of our capital plan for the next 4 quarters, including the one that we're in. We increased the amount of shares that we're going to repurchase from about 8.5 million to about 11. And that's a big increase. We've been very clear with our shareholders. I think they're pleased with the capital return. We returned $3.4 billion of capital to our shareholders in the third quarter. We've had some of the highest capital returns even during the last year.
So where does growth come from at Wells then? let's say, the next 3 years?
Sure. It's going to come everywhere. I mean, I think that even during the last year, which has been a challenging period for the company, our wholesale banking group is up in terms of revenue and earnings, up about 10% year over year. You've seen growth in our wealth and investment management business, again, over the last year in the mid to high single digits. In our consumer lending groups, we're seeing good growth in our mortgage business. We originated $56 billion of first mortgages in the second quarter. We can believe we're going to see good growth like that again. And then based on all the changes that we've made in our retail business, we expect good growth there too. So it's across the entire company.
So what are you seeing in terms of mortgages in general? I mean, is that an indicator in terms of what's happening right now in the economy? Can you go through the lending business, whether it's mortgages, but then also get into auto loans as well, because there's some worry about that corner of the market?
Yeah, so I'll start there first. We got concerned about the auto business because of the extension of term, pricing, advance rates, and the like about a year ago. And so we pulled back in that business. And so our exposure in that business has declined a bit. The first mortgage business is as good as we've ever seen it in terms of credit quality. America's homes are worth more, which is terrific. In fact, we had net recoveries in the second quarter in our first mortgage business, and we're the largest residential lender in the country. We're very proud of that. So we're seeing steady demand there. I think what we're seeing, though, is a demographic shift in that millennials aren't forming households and buying homes as quickly as maybe baby boomers did.
But you see a pretty good recovery in mortgage, in the mortgage business right now.
We do. It tends to be much more focused on purchases as opposed to refinance activity, though we've seen some refinance activity pick up with the rally in rates recently.
What can you tell us about the capital markets business? In the Journal today, actually, top story is Goldman is banking on lending to spur growth, acknowledging its securities trading business is unlikely to pick up enough to be a key revenue driver. Yesterday, Jamie Dimon as well talked about the trading business as being down.
Sure.
What are you seeing there?
I think we're seeing some of the same things, but one of the differences between Goldman Sachs and J.P. Morgan and Wells Fargo, by the way, all fine firms, is that our dependence on trading is much less. We think about our capital markets business and our Wells Fargo securities business as an important component of the overall relationship with the customer, but it's about 6% of our revenues as opposed to a larger percentage for some of our competitors.
So in terms of the fallout from the phony account scandal, can you categorically say that the worst is behind, that you are looking forward now toward growth, or are there going to be more fallout? Is there going to be more fallout? Well, from a legal standpoint.
Sure, I'm very optimistic about the future of the company, but at the same time, I've made a promise, and our management team has made a promise to ensure that we're turning over every stone within the company. So I can't promise perfection, but I can promise that we're taking a thorough and comprehensive review at the company, and if there are issues, we will be very transparent about them.